All right, folks, gather round. Let's talk Forex. You know, that thing people whisper about in hushed tones like it's some secret society. It's not that complicated. Basically, it's trading currencies. You buy low, sell high, just like stocks. Except here, you're betting on the rise and fall of the almighty dollar, the euro, the yen, you name it. Sounds simple, right? Here's the catch. Forex trading is as much about psychology as it is about charts and graphs. Yeah, you heard me right, psychology. Turns out your brain can be your biggest asset or your worst enemy in this game. Don't worry, we'll break it all down, no PhD required. See, our brains are wired for survival, not for making millions in our pajamas. When you see a potential loss, your lizard brain freaks out. It's the same instinct that made our ancestors run from saber-toothed tigers. Problem is, a losing trade isn't a tiger, it's just a bump in the road. That's where emotional control comes in. You gotta learn to tame the beast, to think rationally when the market's doing its best to make you lose your cool and your shirt. Think of it like this. You wouldn't jump out of a plane without a parachute, would you? Emotional control is your parachute in the wild world of Forex. Buckle up, Buttercup, it's gonna be a bumpy ride. First up, discipline. It's not just about eating your vegetables and making your bed, people. In Forex, discipline is your best friend. It means sticking to your trading plan, even when your gut is screaming at you to bail. Think of it like this. You wouldn't go to Vegas and bet your entire life savings on red, would you? Okay, bad example. Some people totally would. But you get the point. Discipline is about making smart, calculated decisions, not impulsive ones. It's about playing the long game, not chasing after every shiny penny that drops. Greed, my friends, is the honey badger of emotions. It's relentless, it's insatiable, and it does not care about your feelings. One minute you're up a couple $100 feeling like a Wall Street wizard. The next, you're chasing after another trade, convinced you're going to be swimming in cash like Scrooge McDuck. Listen, it's great to be ambitious, but greed will take you down faster than you can say margin call. Stick to your plan, take profits when you're supposed to, and don't get cocky. Remember, the market can turn on a dime. Section 5. Fear, don't let it paralyze you like a deer in headlights. On the flip side, we've got fear, the ultimate buzzkill. Fear can creep in when you least expect it, especially when you see those red numbers flashing on your screen. See a little red on your screen, and suddenly you're convinced you're one trade away from living under a bridge. Fear can paralyze you, make you second-guess every decision, and ultimately, make you miss out on potentially profitable trades. It's like being stuck in quicksand. The more you struggle, the deeper you sink. Here's the thing, losses are part of the game, folks. Every trader, no matter how experienced, has faced losses. It's an inevitable part of the journey. It's like learning to ride a bike. You're gonna fall a few times before you get the hang of it. But each fall teaches you something valuable. You're gonna fall a few times before you get the hang of it. The key is to get back up, dust yourself off, and keep going. The key is to not let fear make your decisions for you. Stick to your plan, manage your risk, and trust in your strategy. Remember, trading is a marathon, not a sprint. And remember, even the best traders in the world have losing trades. They don't let those losses define them. Instead, they learn from them and move forward. It's not about avoiding losses altogether, because that's impossible. It's about minimizing them, learning from them, and moving on. It's about minimizing them and moving on. So, the next time fear tries to take the wheel, remind yourself that it's just a part of the process. Embrace it, learn from it, and keep pushing forward. Because in the end, it's not the fear that defines you, but how you overcome it. Section 6. Revenge trading, the ultimate act of self-sabotage. And speaking of fear, let's talk about its evil twin, revenge trading. This one's a real doozy. You lose a trade, and instead of walking away, taking a breather, you jump right back in, determined to win your money back. Newsflash, the market doesn't care about your bruised ego. In fact, it loves to prey on emotional traders. So, do yourself a favor, when you feel that rage building, step away from the computer. Go for a walk, pet your dog, do some yoga, whatever it takes to cool down. Revenge trading is like trying to fight fire with fire. It's only gonna end in disaster. Section 7. FOMO. Everybody's doing it, but should you? FOMO. The fear of missing out. It's the reason we buy overpriced concert tickets and stand in line for hours for the latest iPhone. And in Forex, it can be deadly. You see everyone else making money on a certain currency pair, and you can't help but jump on the bandwagon, even if it goes against your better judgment. Here's the thing. Just because everyone else is doing it, doesn't mean it's the right move. In fact, it's often a sign that the market is about to turn. Remember discipline, my friend. Stick to your plan, trade your own strategy, and don't get caught up in the hype. Section 8. Tips and tricks how to keep your head in the game. Okay, so we've covered the major emotional landmines. Trading can be an emotional roller coaster, and it's crucial to recognize the triggers that can lead to poor decision-making. Now let's talk about some practical tips for keeping your head in the game. These strategies will help you stay focused, disciplined, and emotionally balanced. First things first, have a trading plan. This isn't just a formality, it's your blueprint for success. I know, sounds boring, right? But without a plan, you're essentially flying blind. But trust me on this one. A well-thought-out plan can be the difference between success and failure. A trading plan is like a roadmap for your money. It provides clear guidelines and helps you stay on track. It tells you when to enter and exit trades, how much risk to take, and what your overall goals are. This structure can prevent impulsive decisions. Next up, keep a trading journal. This is an invaluable tool for self-reflection and improvement. This is where you'll record your trades, your wins, your losses, and most importantly, your emotional state during each trade. Documenting your feelings can reveal a lot about your trading habits. Think of it like therapy, but for your trading. It's a way to understand your emotional responses and how they impact your decisions. It'll help you identify patterns in your behavior and make adjustments accordingly. Over time, you'll start to see trends and can tweak your strategies to improve performance. Another tip is to incorporate stress relief techniques into your routine. Meditation, exercise, and even simple breathing exercises can help keep your mind clear and focused. Don't forget to take breaks. Staring at the screen for hours can lead to burnout. Step away, clear your mind, and come back with a fresh perspective. Lastly, engage with a community of traders. Sharing experiences and strategies with others can provide new insights and keep you motivated. Remember, trading is a marathon, not a sprint. Stay disciplined, keep learning, and celebrate your successes along the way. Section 9. Building your emotional intelligence. Embrace the suck. Building emotional intelligence is key. It's not just about understanding the market, but also understanding yourself. This means being aware of your emotions and how they impact your trading. Recognize the subtle shifts in your mood and how they can influence your decisions. It's about learning to recognize those moments when fear or greed start to creep in and developing strategies for dealing with them. These emotions can cloud your judgment and lead to impulsive decisions. Meditation, deep breathing exercises, mindfulness, all these things can help you become more aware of your emotions and better equipped to handle them. Taking a few moments each day to center yourself can make a significant difference. And remember, it's a process. Building emotional intelligence doesn't happen overnight. It's a journey that requires patience and persistence. You're not going to become a Zen master overnight. There will be setbacks, and that's okay. It's part of the learning curve. There will be moments when you want to chuck your computer out the window. These moments of frustration are natural and can be used as learning experiences. But the more you practice, the more you will find yourself able to stay calm under pressure. Consistent practice helps in building resilience. The better you'll become at managing your emotions and making rational decisions. Over time, you'll notice a shift in how you approach trading, with a clearer mind and a more balanced perspective. Embrace the suck, because it's through these challenging moments that you grow. Each setback is an opportunity to learn and improve, so keep pushing forward, stay mindful, and remember that every step you take is bringing you closer to mastering your emotional intelligence. Section 10. Remember, it's a marathon, not a sprint. Here's the thing about Forex, it's a marathon, not a sprint. Don't expect to get rich quick. Anyone who tells you that's possible is either lying or selling something. Success in Forex takes time, patience, and a whole lot of discipline. Focus on the process, not just the profits. Enjoy the journey, learn from your mistakes, and celebrate your victories, no matter how small. And most importantly, don't give up. Even the best traders in the world started out knowing absolutely nothing. Section 11. Go forth and conquer, but, like, responsibly. So, there you have it, folks. The lowdown on Forex trading psychology. It's a wild ride, no doubt about it. But with the right mindset, a little bit of discipline, and a healthy dose of emotional intelligence, you can navigate the ups and downs and come out on top. Just remember to keep your head in the game, manage your risk, and never ever invest more than you can afford to lose. Now go forth and conquer, but like responsibly.